Hey everyone, and welcome back to our usual chat about the strategies in our portfolio that have performed the best over the last period. As always, you know the drill by now. Before we start, I invite you to please leave us a like, subscribe to our channel, and go and click on that notification bell. And that way you're able to stay updated with all our new content, our videos, so on and so forth. Hi, we are the Unger Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unger, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. So this week we're going to be chatting about the Nasdaq futures, which tracks the performance of one of the most famous indexes in the world, precisely the Nasdaq, which contains the 100 most highly capitalized US tech and non-tech stocks. These futures undoubtedly suffered significant losses in 2022. However, they also went through a significant increase in volatility, which means that trend-following strategies, like the ones we're going to be looking at today, responded very well to market movements. Specifically, I'd like to introduce you to two strategies that, as I mentioned earlier, will try to identify and exploit the trends in Nasdaq futures. Now, the strategy that we're seeing now, which comes from 2 consecutive stop losses, and of course, you know, that's part of the game. However, this strategy, it's been able to take advantage of those moves pretty well. I mean, the long positions will be opened when the price breaks through the previous day's high, minus 10 points. On the other hand, the short positions will be opened when the price breaks through, obviously downward, the previous day's low, plus, in this case, 35 points. So by doing so, we should be able to, in some way, anticipate the market and the movement that the market will make using levels that we think are sensitive, such as the high and the low of the previous day. So let's take a look at the performance of the strategy. It was developed in 2018, so we could say around this time here, and you can see that it has been able to make, well, some incredible profits in out of sample, and all the years have been positive. And most interestingly, 2022 is also very good, especially if we consider the buy and hold, which was very bearish. Now, 2022 starts more or less at this point, and as you can see, well, this market's pretty much only gone down in the current year. The short side, well, that's worked pretty well. Protecting our account from market declines, which we know when they happen, can lead to a panic situation of some sort. And as we can see, this strategy was able to intercept the trend reversal that had taken place in this market. And this is the short side, and we can see that it did better than the long side, which, however, it didn't do much damage in the out of sample, in spite of the strongly negative buy and hold of the current year. So let's move on to the other strategy that I'd like to show you today. This is also a trend-following strategy, but in this case, we'll identify the level starting from the opening of today's session and adding to it or subtracting from it a factor calculated on the ATR. So for the long trades, we'll wait for a close above the opening plus 6 times the value of the ATR, which is the average true range. That's to say the indicator that measures the average volatility in points over a certain period. On the other hand, for the short trades, we'll wait for a close below the opening value of the session, minus 8.5 times the ATR. So, really, basically, we're going to be waiting for a more decided, a more significant drop to be able to enter the market, as opposed to the conditions on the long side, which are more permissive in some ways. Now, this strategy has also worked very well. Here we see the results of the long curve, which has performed pretty well in the last part too, in spite of the significant declines in the market. But again, it was the short curve that produced the most significant gains for our strategy. And this is a strategy that, in this case, will close its positions at the end of the session. As you can see, the average trade isn't massive, but these are already the net results without fees and slippage. And as we can see, the quality of the short trades has improved a lot in the last period. I mean, the number of the long trades is almost 3 times the number of the short trades. But, well, we can see that the average trade of the short ones, well, it's pretty larger, should I say. So overall, this strategy, which was also developed in 2018, has proven to be very effective in the post-programming period. So you see, these are strategies that undoubtedly all of our students can easily code. So please go and try them out for yourself. Now, if there is anyone among you who is interested in the world of systematic trading, I recommend that you go and click on the link in the description of this video. From there, you can access a free presentation by Andrea Unger, or go and get our best-selling book, The Unger Method, covering only the shipping costs. Or you can even book a free call with a member of our team. And if you enjoyed this video, please be sure to leave us a like and subscribe to our channel. And please don't forget to click on the notification bell so that you can stay updated on the release of all our new content. And that is it for today. We'll see you soon in our next video. Bye-bye for now.